Now we'll discuss the various functions of financial market. The first one is mobilization of savings and channelizing them into most productive uses, right? So what is the first function of financial market? Financial market mobilizes savings and channelizes them into most productive uses. First they mobilize, right, savings, and then channelize these savings into most productive uses. Means that amount, right, the money should be put to the best uses. Fine. Or you can say the optimum, use, the optimum utilization of money or the savings. Fine. So that is the first function of financial market. Financial market, as we discussed earlier also, that it brings together the savers and the borrowers. Fine. So there are savers which have the surplus fund, and there are the borrowers which have deficit funds, or you can say they are called the deficit units. Fine. So they bring together the surplus unit and the deficit unit together. Fine. And then financial market also provides the choice of different investment option to savers, right? Savers, they have surplus fund or money in their hand, so a financial market provides them alternative uses of that surplus fund or the money. Fine. These different investment options, they depend on the risk and the profit involved. For example, you might have seen that money, generally we invest money in mutual funds. So mutual funds, they have, the equity funds are there, debt funds are there, or the mixed fund are there. Fine. So in equity fund there is high profit, but at the same time there is, more risk, right? There is more risk. Whereas in debt fund your investment is considered to be safe, right? There is less risk, whereas the return is also very less. Fine. So in equity, risk is high and the profit is high, whereas in debt risk is low and the profit is also low, right? So financial market, it provides different investment option to the saver, so that they should not park their amount or the savings into one type of investment or one type of fund, right? Second is informational role for price discovery. Right? So financial market also plays an informational role for price discovery. Price, generally you might have studied in economics that price of any good is determined by the demand and supply, right, in the market. So generally in a market, the price of a good is determined by the demand and supply. Right? There are two players in that market, one is producer and then other one is consumer. Likewise, in financial market, again there are two players, one is household and the second one is the business firms. Fine. And the price of the debentures, shares or any security is determined by the demand and supply of funds. Fine. So you will see that households, they are having surplus fund, so they supply funds. Whereas business firms, they are the deficit units, so they demand funds, right? So it works as a general market. Third one is it provides liquidity to financial assets. Financial market provides liquidity to financial assets. As we discussed that financial assets are the shares, debentures or any kind of securities, right? So they are the financial assets. So it provides liquidity to such assets. What do you mean the liquidity? Liquidity means the assets which can be easily convertible into cash when required. As and when required, they should be easily convertible into cash. So that shows the liquidity of the financial assets. Fine. So financial market provides easy sale and purchase of financial assets. Since there are households, there are business firms, they are dealing together with the help of financial market. Financial market, that's why it provides easy sale and purchase of financial assets. It also provides, financial market also provides liquidity, as I discussed, that it can be easily convertible into cash. Fourth one is reducing the cost of transactions. Fine. When the seller and buyer, they have a direct communication and less mediators are there, fine, or if there are not many people in the channel of communication, then communication becomes easy and direct, right? So a financial market brings the seller and the buyer, or you can say the households and various firms or the companies together, and they have a direct and very clear communication. So a financial market provides a common platform to the buyers and sellers, right, to fulfill their individual needs. The buyers and sellers, if I am as a company, if a company is issuing some shares or debentures or any kind of securities, why they're doing it? They're doing it to increase or for the wealth maximization or for the profit maximization purpose. So they have their individual needs. Maybe they have to buy or invest money in different, purchasing or buying different real assets so that they can increase their wealth and profit. Fine. So they have companies, firms, they have different motives, whereas the savers, you can say, they have different motives, they have different individual needs, fine. So in order to fulfill their individual needs, they come together in the financial market to make profit. And financial market also provides information about price, cost and availability of security. As I told you, there is a direct and a clear communication between the buyers and the sellers, so there is no high cost of transaction involved, fine. So they are easily available and available at a very low cost, therefore time, money and efforts are saved if buyers and sellers, they are coming together or they are operating, they are working together in a financial market. Thank you.